And now, of course, how do we match the needs with the loan types? So, these are some of the different types of loans. We're all familiar with this, but just really wanted to briefly, talk through these and make everyone aware of the different types of loans and really then the impact on the business owner. So, of course, the first one is the Small Business Administration loans. They back small business loans through local banks and agencies, and they can be used to buy equipment, inventory, furniture, supplies, etc. Really all-purpose type loan there. Of course, next we have credit cards. And a lot of small business owners may even be using a personal credit card. Now, of course, ideally, hopefully they're using a business card. And credit cards are very convenient. That's why we all use them, right? Essentially, it's a revolving line of credit. However, this convenience is really costly often. Cards typically offer high interest rates and with limits that are really just around $15,000 or so on average. Now, in order to, get the best information from your clients, they're obviously going to have personal and business credit scores. Excuse me. And like most lines of credit, this isn't something that businesses should overly rely on. It really should be just day-to-day type purchases that the business will easily be able to pay for at the end of the month. Now, of course, we have our line of credit, typically 90 days to a couple years as far as the term, and they can be extended, of course. Maximum amount typically anywhere between $10,000 and a few $1 million. The interest rates, of course, float and whatnot. Now, these types of loans are typically meant for working capital needs. Again, your client really needs to be careful to not overextend themselves and their business by drawing out too much money that they can't pay back. Now, the last, traditional type loan we think of is the commercial loans. And there's really two different types, short-term and long-term. And although the short-term loans are often used to finance things like operating costs, working capital, they're not really interchangeable. A commercial loan is typically taken out for a specific expenditure, and a fixed amount of money is borrowed for a set period of time. And again, we're not saying anything that you guys aren't already aware of, but it's really crucial to help your clients know all this information.